after the finance minister's announcements last week. Now firm start for the markets this morning.
That's right, Gargi. It is a crucial Monday for our markets. Remember, the classic dilemma that everyone's talking about for D Street is the fact that do we look at our domestic cues and the finance minister's announcements on Friday, or do we look at the global cues which are so weak given the US-China trade war escalation? So for now, the Nifty is holding on to the 10,900 levels. The Sensex is holding on to the 36,900 levels. However, remember, within the first few minutes of trade, Gargi, our markets have seen a downturn. The Sensex opened higher by over 300 points. Is currently above only 200 points. So clearly a sign that this is a volatile day of trade ahead, and like experts believe, this could just be an investment and an investment boost, a boost for the sentiment of a lot of market experts, but not a boost for really what's happening on ground. So that is something we have to watch out for. Clearly the market will decide its verdict at close today. So that, the sectors we'll really need to watch out for after the finance minister's announcement will be banking stocks as well as auto stocks. Remember, both these sectors, the stocks opened higher. However, for auto ancillaries such as Motherson Sumi, within the first few minutes of trade, we've seen a correction. So we have a market expert, Deven Choksi, who will tell us what to make of the market opening, which does suggest a volatile day of trade ahead of us. And of course, economic data later this week with the GDP Q1 numbers to be out. Mr. Choksi, what do you make of the fact that the markets within the first few minutes of trade have seen some sort of a correction? The Sensex opened higher over 300 points, currently above only 200 points.
Yes, good morning. Well, I think the market had to bounce back. It has bounced back, and I think on the basis of the positive announcement which came up on Friday from Finance Minister, removing all the concerns from the minds of the people, particularly showing the commitment that the government is willing to listen to people and take corrective actions in a course of time. I think that sends a very positive signal to the market. However, having said that, I think the buying is not yet returning back into the market because the collateral damage which has happened in the market is quite significant. In last 2 months, I think the market participants have lost a good amount of money. And as a result of which, I think their participation would probably wait for a while before we getting a comeback. Because I think the foreigners are already selling out and they are going back to the gold asset, or they are going back to the debt as the situation is. And because of that, I think the market will wait for new money to come into the system. Should you find new money coming into the system from the foreign investors, I would think that the market will have the ability to bounce back. Also, the fact that we have the expiry week, and as a result of which, in this expiry week, we are likely to see the market not building long position in a very significant way. And the month of September, first 15 days, also I think the mixed sell position might not get immediately built because people would probably look at the advanced tax figures and...
Okay, sir, but we want to know for our general viewers, we want to understand what about the weak global cues, US-China trade war escalating. What do you make of that, and how will that impact our markets?
That we can't change, honestly. I think that is something which is not in our hand or neither in our control. And as a result of which, we have to live with that. I don't think that we are going to be adversely affected or otherwise. See, India exports, I think only 2% of the trade of India is on exports. And as far as I think India is concerned, I think it's more an important country. And if the crude oil prices goes down, I think structurally India should be benefited and not otherwise. However, I think the situation is that I think because of these global problems, the money will get pulled out of equity, and that could land the collateral damage. Otherwise, I don't think that the fundamental damage to economy is happening because of this trade war.
Right. Thank you so much, sir, for your views. Remember, Deven Choksi, market expert, telling us the fact that, this is a collateral damage that has happened to our markets, and we'll only have to wait and watch. We can't expect everything to recover in one day. So that's one takeaway from what he said. About the global cues, he said we'll have to wait and watch how they pan out. We really can't do much on that. And of course, we'll just have to eye how that pans out and how that continues to impact our markets. So lots more in the business world later in the day.